All right, good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and this is your weekend video. It is Saturday, April 14th, a beautiful day in New York City. So I am getting a little bit out of the sun because it feels like it is spring has come, and it's all in one day after. I'm just joking around. It's like 75 degrees outside after it's been about like 35 for 2 months, but I believe it's going to be 40 degrees again tomorrow. Anyway, that's a different story. So actually, I was going to say a couple of things, a lot of things to talk about in this video. Some different areas kind of rose to the top last week, and I'm going to talk a lot about strategy in this video. So this won't be as long as last week's video, so we're going to get through some things, but spend some time on a couple different topics. We're also going to talk about last week's option activity, where the buyers were in that space. So first things first, I like to always start with a recap of last week's performance. No doubt energy crushed it. Really nice performance last week. OIH up 10%, XOP up 7.8%, XLE. You can see the three ETFs that I track were all on the top of the list there. Also, it wasn't just energy, which I know a lot of people were very excited about, but well, I mean, there's a lot of other sectors that actually performed pretty well here. Look at biotech sneaking in there, up six. I've got IBB, but I also track XBI. Looks like on my watch list I have IBB, but you can see up 4.8%. I think XBI was up a little bit more than that. You also had tech that performed pretty well last week. So there was also some nice performance there. So if you've been in some of these positions, and if you're overweight tech still, those did okay. And I'm going to talk a little bit about strategy about that. What didn't perform well? The previous week's best performer was the home builders. That actually gave back a lot of the profits from the week before. Utilities were actually down. Retail, which was strong the week before, underperformed. Pretty good performance in international markets. You could see there was markets like Norway, which is heavy energy, was up 4.6%. They've got a lot of energy exposure. You could see pretty good breadth. You could here again, just like we saw in the U.S., a lot of different areas were up. The only thing that was really bad, a couple areas were bad. It looks like a lot of emerging markets led by Russia was down 9%. All kinds of things going on over there. So we did see some call buying in that space too, some dip buying, and also some inflows into Russia. Let me just go over the week's inflows. I like to do a combination. What I tend to focus on is both option activity, which is really good to see where they're buying, what groups they're buying. Also for sentiment purposes, I like to watch option flow. And then also for a little bit of the longer term trend, I like to look at ETF flows. They really kind of give me a sense of what's going on in that space, as well as sentiment as well. So I would say probably about 5 bullet points out of last week's ETF flows. The buyers returned to equity ETFs for 3 weeks in a row. There was outflows in equity ETFs. They kind of came back pretty nicely last week. That's a nice chunky inflow. That's $8.6 billion. So that's theme number one in the ETF space. When you kind of drill down into that, you'll see the sector flows here. But before I get to that, international has been very quiet. You could see here, based on the international fund flows, developed markets, which is pretty light. They were running developed markets as well as emerging markets. For most of 2017, were running about $1 billion of inflows a week. That has really dropped off drastically the last couple months as volatility has moved up. So we'll see how that takes shape in the next couple of weeks. We'll see if the buyers return back to that. But you can see developed markets are only $296 million of inflows. And you could see behind that, less than that, there was not a lot. Russia, like I said, there was some dip buying going on as that broke the 200-day moving average. There was a little bit of buying in China. But again, these are really, really light flows. I normally only talk about flows once they get over $100 million. One thing that sticks out like a sore thumb is, again, Europe. That's now, and I think I have it here, Europe has now seen 7 straight weeks of outflows, which totals $4.6 billion. So towards the end of 2016, most probably throughout 2017, there's a lot of money that was being added into this developed markets, which covers Europe as well as European specific ETFs. And there's been a lot of draining of the money coming out of Europe. So we'll have to see when that flips around. I think that it may be a buying opportunity, considering how much money has left at this point. Usually, when everybody tilts to one side of the boat, usually you'll see a little bit of a snapback. I think we saw that a little bit last week. Also, if you note, some of these charts are not that bad. I did add a position. I kind of felt that it was the right time to add to IFA, which is International Developed Markets. I was just waiting for that to come up here. But it is back above the 50-day moving average and does not look too bad. So as long as you're being disciplined here, again, I'm not going to make any predictions, as I never really do. But all I know is it's got a nice, so what does this tell me? So what can we learn from this chart, right? We've had a big pullback. We've had this sideways action. It's held the 200-day moving average, and it's now turned the corner. Price is above the 50, the 5, the 20, all the short-term moving averages, right? So I view that as a good sign. And then you also have to find support, 70, 47, or the 50-day moving average, whichever one you prefer. But I like that it's now above the April value area. So all it could take is one day it could go back in a value, and I'll get stopped out, but it will be a small loser. But I want to play this trend because it's been a really nice trend, and it is now, I consider this a dip. Considering that what it's done here the last couple months. So I did establish a long in this space. I actually chose IEFA because the management fee is cheaper. But nevertheless, let me finish the ETF fund flows, and then we'll talk a little bit about what we're seeing in the technicals. Fixed income, right? So I want to talk about this for a minute because really. And again, I don't think too many people have been talking about this, but if you kind of go back up here, this is heightened, right? Last week, fixed income ETFs saw $4.3 billion of inflows, and that's been a trend now. The last couple of weeks have seen. You can see the week before was $5.3 billion. So again, fixed income is a very broad category, just like equities are. So you kind of have to drill down to see what they're doing. One of the things that they're doing is they're adding money back to high yield ETFs. So I have that in here. And I've talked about that. Again, this doesn't get that much press. What's funny is, when seeing, sorry, I don't want to single anybody out, but what happens is they always talk about the outflows and they always try to get you scared. Once the money comes back in and once the buyers are returning, they spend very little time talking about that. So it's just funny. And I know they're in the business of getting ratings, right? So when they talk about like big outflows in high yield bonds, I guess that gets people on the edge of their seat and people get worried. But last week and the last 2 weeks, actually, because I had this in last week's newsletter as well, corporate bond ETFs and high yield bond ETFs in particular are seeing really big inflows. J&K saw $814 million, and I have a whole bunch of tweets to kind of detail that was some real big buying that was going on. And you could see this if I'm going to bring up J&K, and I'll show you exactly what I'm talking about. But you could see the volume start to pick up here, and you could see that if I go to the daily chart here, and again, my Thinkorswim charts are not dividend adjusted, so the high yield bond ETFs do have big dividends, so it's better to look at these in dividend adjusted charts. Let's see, why is this not helping me here? I think I just have to zoom out a little bit. So here, you could see all this money, these big blocks that went up. Again, this is like $250 million that went in on Thursday. So later in the week, and again, you could see how much, I was talking about this in the trading room on Friday. When I used to trade ETFs institutionally for Bank of America Merrill Lynch, I would often make markets for, like 500,000 shares. And what happens is, in order to hedge that size, I mean, these were blocks of around 5 million shares that went up. Or I believe 2.5 million shares was one block in J&K. HYG was the one that I was talking about with the 500,000 shares. That also saw the buying. But the market makers, and I know this because I used to do this. So there's 3 million shares of HYG. You would actually have to hedge. You would actually buy a little bit of S&P futures to help you hedge the position. So you're also buying equities to help hedge yourself. But again, look at the buying going on. It's pretty remarkable. And again, that's I've proved that this is buying because you could see on my fund flow spreadsheet that these were inflows last week. Why did this get so small? So this is something that I track on a day-to-day basis. But again, I view very positive money coming back into the space. You could see J&K. I don't know what's going on here with the spreadsheet, but J&K had $813 million of inflows. Again, I use Bloomberg with the help of Bloomberg. I use their API to track those fund flows. So again, that's pretty good. That's risk on. So I think that's a good sign that money is going back into high yield bonds. Remember, a couple months ago, everybody was worried about credit issues and so on and so forth. I'm not going to rehash all of that, but for that money to come back in, I think is pretty good. All right, so let's go to. I think that's all I wanted to cover in terms of ETF fund flows. Also, gold has been seeing inflows the last 3 out of 4 weeks. Not huge, dramatic inflows, but a little bit. Like about $200 million a week, and that's the 3 of the last 4 weeks. That there's been buyers in GLD and in IAU, the iShares product as well. Okay, so what are we seeing here in the S&P, right? And I know I spent some time last week talking about that everybody has their eyes on the S&P. I start to look at some other things, right? I mean, it's just not telling us that much, right? So I'm not going to put out a chart with all these notes on it and so on and so forth. I just kind of think it's a little bit of a waste of time to dwell so much on the S&P. There's always going to be certain groups of stocks that are moving to the upside. There's going to be some stocks that move to the downside. Sometimes it's more or less, sometimes they can all kind of go up where there's a broader participation. But I think there's other things to kind of look at besides the S&P chart, which is basically trying to turn the corner and trying to get out of this, sideways pattern. And again, it takes time. Once you have a big correction, we don't always see a V. Many of the other corrections that we've seen, it just takes time. It's so you have to be patient. And you have to kind of position yourself if you're trading options, and I know a number of you do. If you're putting on short-term options, you may not get that move that you're looking for right away. So you have to structure your positions. And then also we'll talk a little bit about strategy. Let me just get through a couple more charts. What I talked about last week and I'm talking about again is small caps. I think small caps are a very good leading indicator. Contrary to popular opinion, small caps do not have many energy stocks, so that's really not the reason for its outperformance. If you go ahead and you look, I'm not going to bring that up on Bloomberg, but I think I hear it almost once every week that it's energy that's going to make or break the small caps. There's less than 2% of energy companies in IWM, so that's not it. But I do view them as a leading indicator, and I think right now they're performing a little bit better, not huge, but a little bit better than large caps right now, both in the Dow Jones or in S&P. And again, I think that's positive. So again, look at this. It's actually it's pretty sideways looking, but it's turned the corner out of this, and it's above the 5, the 20, the 50. 100 and 200, it's above all the moving averages. So right now, although it's not by a lot, but we're above the short-term moving averages. Something to be said by that. You could also look at, if you want to look at RSP, which is the equally weighted ETF, so that the small caps get the same weight as the large caps. There's not much to really go on here just with the S&P. There's not much difference. So again, you kind of have to be patient here. It's nice that we found that support of the 200-day moving average. We're a little bit off that, but I think we're going to continue. We'll kind of just bring up a VIX chart. We did see the VIX come in a lot towards the end of last week, which I view as a good sign. And we're back to 1741, believe it or not. We were hanging above 20 for a good number of weeks. We're back. We haven't broken completely down. But I view this coming well off of 20 as, a positive sign as well. Again, so it's just, looking at multiple factors and saying, this is good, this is bad, this is good. And I see right now more positives in the marketplace. again, I think it's going to be a bumpy road. We have, if you look back 6 months ago, what was, the presidential administration was focused on getting a tax plan approved. Now they're focused on, possible trade negotiations with China as well as with NAFTA. So it's a different priority list and a bumpier list. So that, and we just had an attack, missile attack on Syria just the night before. So we'll have to see how that shakes out. Hopefully it'll be like last year, right? Last year there was a missile attack, and there wasn't much of it. So I want to talk. So that kind of just goes right into talking about the commodities. I do think oil, purely the technicals, right? You have to look at oil, you know, to say that it is breaking out, but I have to say I'm not fully on board with the oil move. I do want to see this, go higher and so forth. I think it opens up a lot of trading opportunities. I think the weekly chart looks pretty good here in oil. But you have to remember what happens when there's, this is just something that I've learned over time for trading. Whenever there's global tensions, and there's, tensions meaning like missile attacks, right? What happens is oil gets a pretty big bid. Once those tensions tend to, fall back a little bit, oil usually sells off, right? And we could see, when was the last attack on Syria, which is, pretty much the last, I don't want to say military crisis or maybe small conflict, but that was in the beginning of May. So what happened when that escalated? Oil rallied. Now it doesn't look technically like it does now, but you could see there was a big run up into that. I think that attack was on the 9th of April of 2017, and you could look, oil fell all the way back. So again, I'm not saying that that's going to happen, and I don't know if this conflict is going to escalate further than what we saw on Friday night. But you do have a VPOC up here. You have a purple line, but I would be just a little bit cognizant of the fact that once an international conflict, once it starts to kind of quiet down a little bit, usually oil comes back in. So that means a couple things. If that happens, maybe it'll be a buying opportunity if it's a shallow pullback. And then also, again, I do like this chart. If you go back here and look at this chart, you can see that it's been forming this base for a long time. So it does, the takeaway from this is, from looking at these technicals, is the price is above all the short-term moving average, and it is in an uptrend at this point, looking at the daily chart, right? So those are positive things, and you want to ride the trend for as long as it lasts. The only other thing that worries me is that hedge funds are super bullish oil, and when they get super bullish, usually it goes back down. So that's the only thing. So again, I'm kind of just giving you the thoughts in my mind about oil. How to play this? If you're kind of like me, kind of going back and forth with oil, where you don't want to basically jump all the way in, is to kind of have some exposure to it, but maybe not have an overweight exposure to it. So I think it's a good time to kind of go into last week's option activity. Certainly, I would say that was one of the themes last week, starting, let's see, maybe the beginning of the week was the 9th. I think on Tuesday is where we really saw a lot of call buying, and we saw that in the ETFs. Pretty short. The other thing that I like to look for when I'm looking at the option activity is how far out they're going, right? So if they're just going out, like this WMB that I've highlighted for a reason here, they only went out to April, right? They're not buying August. They're not buying November, January options. They're buying next week's options, right? So they were looking for a short-term move for the most part, right? So that's a big deal, and I think a lot of people lose sight of that. Now, not everyone was that way. This PXD, there was multiple buying of this one. Again, but some of what we saw last week was momentum plays, right? Everything short term. May's a little bit further out. Maybe they think it could last for a couple weeks. ETP May. So you kind of have to have that in the back of your mind. As I've talked about, I think in last week's video, the difference between a trade versus an investment. This kind of stuff. I mean, there was nice HP that was bought several times last week too. I think you want to think about some of this as a trade, not so much some of these things as an investment. Where was the other HP order from last week that we saw? Or I'll just bring it up here as I'm trying to go from memory. That's not it. That's the wrong symbol. Again, April. Yeah, these were Friday's calls. It says today, but this is Friday. So they're only going out a week. So you want to keep that in mind with some of these energy plays. Look at how far out they're going. If they're going out to, in HP, this is why I didn't take this trade. If they're only going out a week, then you really want to have that trade on for, a day. It could be just a day trade, or could be just one day. So you want to bear that in mind, that a lot of the energy buying that we saw last week was very short dated. So again, doesn't mean that I don't want to own the space, and I do have a couple things. I think, and I could detail some of the trades. Exxon was a trade that we saw several times. PXD was another trade, but I could literally spit out 10 different names of energy names. So what do you do when they buy all these different names? You kind of have to pick and choose. You could look at the charts and say which one looks really, which chart setup looks the best to me. Where's the Exxon trade that I saw last week? I may not have it highlighted. Again, short dated stuff for the most part, and I'll bring up the 5-day for Exxon trades. There's May calls as well. May, there was some Julys, Octobers. So this one's a little bit further out, right? So this one, September as well. So this is a little bit different. But bottom line, I don't really like the Exxon chart because it is below the 200-day moving average. I believe this is non-dividend adjusted. But I think it's just as easy to kind of take a position in, one of those three energy ETFs, XLE, XOP, which saw call buying as well. I actually saw a big put buyer as well on Friday. One of the charts that I like, that I think is a good looking position, is GUNR. Now this is a different ETF. You may not be familiar with it, but it's a combination of resource companies, energy companies, mining companies. This way, you could take a position. You've got exposure to all three, and and I like some of the charts. So let me take a step further here. One of the charts that I like a lot, which we saw call buying, I took this trade on Friday. I took it for a small position because again, I just didn't want to put on a lot of risk before the weekend. But I like this BHP position. Let's look at the option activity. Let's start with the weekly chart in BHP. So first of all, what did they do? This big block, 21,000 August 55 calls. So this is what I like. This to me is more of an investment rather than a trade. And we see all day long plenty of opportunities for trades. The ones for investments is kind of what I'm more or less looking for. Again, for the longer term trade. So this one really sets up nicely, I think, on the weekly chart. And again, this is a nice trade, $1.4 million. Take a look at the technicals, the weekly chart. It's kind of moved back in here. You've got a falling, I guess you could call it a wedge. You could say that this is a channel as well, and it's breaking out. Look at the support that this thing had, 44.31. What a great level to trade against. So again, sometimes option activity just really gives you a good idea. Now, I don't know what they're going to do with this position, but I love it technically. So I'm going to look to put this position on in cash as well. It's only $44. You drill into the shorter term chart. And it's also, you could see this channel break as well, and you've got your support as well as 45.68 in BHP. So I like this. This is an Australian company. They only report every 6 months. They don't report again till August too. So this one you don't have to worry about earnings so much as well. All right, so I'm going to continue going through the option flow, but before I forget, I very rarely do this in the videos, but I'm going to do it. So just bear with me. We do this analysis all week long. I would love it to see if you guys tried the trading room. There's so much more that I do that I don't put on Twitter. I've just, I'm not going to do that. I don't put out every trade idea that I have on Twitter, but you could check out what we do. You could check out our platform. And it's not just all about me and my trade ideas. We've got a really great group of traders in the room who are providing different ideas every day. We've got some guys who specialize in different sectors as well. So it's a really great group of traders we have. And you could check us out for just basically $7 for a week. So I think it's a great opportunity to do it while I'm running this special. You go to tribecatradegroup.com and check us out. I think you're going to like it. The analysis that I do, I don't think really many people do. I think there's. I'm not going to get into what other people do, but I really kind of mesh in trends between what we're seeing in ETFs, options, and then the technicals. That's again, I view the option signals basically just as trade ideas, and if it really sets up nicely on the charts, I take the trade. And I run two different portfolios. So I run a cash trading portfolio where, basically I'm putting on trades where I think the trend looks pretty good, and I'm defining my support, defining my exit every time I enter a trade. And then we also do a little bit of option trading, and we're going to do a webinar next week, which you have to be a member for, on limited risk reversals, how to trade options in a higher volatility environment. So anyway, that's just a little bit about the trading room itself. Let me go on to a little bit more of last week's option activity. So again, I think there was really something for everybody. And again, I think putting on a couple trades in this space, again, you don't have to have, just because we saw all this option activity in energy, it doesn't mean to load up your portfolio in energy stocks. I view it as pick a couple names. You could also do what's called the core satellite approach. Put on an ETF to play the whole group, and if you've got, let's say, just for round number purposes, if you've got $10,000 to spend on a whole sector, that's your allocation for a sector. Maybe do $7,000 in an ETF, and then $3,000, and pick a couple names for single names. Such as BHP. So again, for me, it's something like GUNR to have a bigger position in, and then a smaller position in BHP, because a lot more things can happen. You have single stock risk, obviously, in the individual names. But anyway, that's just one particular approach that you could take. So let me keep going here with the option activity from last week. Let me start. It's always difficult to kind of start from all the way from Monday, but so I'll go through them pretty quickly. MAS saw a nice call buyer. This is, again, a little bit of a different name, Masco. More in the home building space. I don't think this name did much last week. Kind of sitting right in the middle of value, right on the 200-day moving average. I did not take this trade. I think the chart looks fine. Maybe waiting for a little bit of confirmation. You've got this, you've got this trend. It is trying to break out. I would watch 41.63. Get you a little bit above the 200-day moving average and out of this downward channel. Again, I'm not going to go over every energy name, but COP, that was a name that I traded 2 weeks ago. Conoco did very well in that name. I missed the last little move up here, but Conoco has probably been one of, I would say, the 5 strongest energy names and most frequent option activity that we've seen. Conoco, they've gone after Conoco now several times. Sarepta, this was a name that I traded last week as well. I put this on Twitter. I'm out of this position. It did what I wanted it to do. I got in right on the first day, held this for a couple days, and made a nice trade out of it. I thought, this thing I think can go higher, no doubt about it. But I was only looking for a move from $74 to 83. Also, these names these biotech names, single stock names, they are very tricky to play in options. The implied volatility is super jacked. So you get they're one of these. I always view the biotech options as more of a trade than an investment. The implied volatility is, a lot of these names, the implied volatility is way over 50, which means they are really expecting big moves. They're expected options. If you're dealing with stock, you don't have to worry about that. You don't have to worry about the implied volatility. A little bit easier, but again, a high price stock. You're dealing with an $80 stock. So this was a nice win last week in the room. PXD, this one I would say in that top five of the most option activity that we've seen in the energy space, most frequent option activity. It's got to get above now. It's already made a decent move. So what do you do at this point if you've missed it? Because it did move pretty quick. Even though we saw option activity several times in this name, which kind of gave you a sense. But you kind of look back, or you look back at a weekly chart, and you could see this name really hasn't done much other than, from high to, if you caught it right on the lows, congratulations to you. But if you didn't, it's been a pretty sideways looking chart. You go look at this weekly chart. What I'm looking at is really a break above 193. Then I think it could really get going. And that's resistance is coming up. So about $5 ahead. Short term, you can see I've got a dotted line here. But I think if it's, maybe a small position at this point in PXD, again, tough because you can only really play, in my opinion, it's tough to play this in stock. It's $189, $188, just easier to play it in options. Maybe something like call spreads might work. Again, a lot of other trades, but I'm not going to go over every single trade from last week, just the ones that are highlighted. I'll get to Twitter in a second. Again, like I said, something for everybody. Micron had a nice week last week. It's funny because everybody gets negative on the stock, and there was call buyers that came back in to Micron last week, and it had a pretty good week. You could see that it kind of this was the move 2 weeks ago. Everybody got super negative on it. There was a broker downgrade, and everybody's like, horrible. Well, what did it do from there? Came all the way back. Now, it did fail at the bottom of value, 53.47. That's the level I would watch going forward. But I love when everybody gets super negative on it, and I would see if this thing can get into value. But there was definitely call buying in this. A lot of these calls that went up last week, they were against open interest. So you had to go the next day and check to make sure that they increased open interest but for the most part, they did. All right, some more. You could see PXD, but again, this one was short term. Red Hat. Again, like I said, something for everybody last week. Red Hat chart looks great. I think it really looks nice. Been in an uptrend. Dipped a little bit on Friday, so there's your support. Let's see if it bounces off support. I think any dip you could basically buy. And the thing that I like about Red Hat is they're going out to September too. While I'm on this space, forget about the FANGs just for a minute. I know everybody's always so focused on large cap tech. I am not. I'm not one of those. I do, I will look at Google and Amazon and so forth, but I'm really much more interested in these enterprise application infrastructure software companies. These things are so strong. So you look at these and I was making a joke last week and I'll make it again. So sorry if you've heard this joke already, but look at the pullback that we got last, big correction in this stock. No, we didn't get any big correction. Look at the strength in this stock. It only came into the 50-day moving average. Again, small cap name Zendesk, but look at the group. You could look at Splunk. I mean, really, really nice. And you see this pattern over and over in these names. So again, you don't have to own every one of these names, I don't think. You can just kind of maybe pick maybe a couple. If you don't want that single stock exposure, or if you're a little bit afraid because you don't know Splunk very well, NTNX is another one. They all came into they all had a small dip, and they look pretty strong. That's another one. I think Adobe looks pretty good, even though that didn't come out. One of my favorites in the group, which I am long. Again, I'll always talk about my longs. That's the benefit as well that you get in the Tribeca Trade Group trading room. We trade for real. We don't just talk about after the fact moves and say how great it was. I've got skin in the game here, so I'm long Salesforce. And support, again, I think what we saw a lot of on Friday is these bearish engulfing candles. However, I'm not really getting that worried about the bearish engulfing channels because the trend is up right now. So if this proves and we start to break down, then I would be a little bit more worried, but we're not doing that. Another one that I think is interesting here is ATVI, which has seen call buying. So this saw a 1 by 2 call spread. It's just sitting on the 200-day moving average. These gaming stocks really haven't done much. Now, it didn't have follow through from Thursday, but again, which gives you a chance. You got, again, and you're starting to see MACD crossovers all over the place. So you didn't quite get one here in ATVI, but I did like the option activity, and I'll bring that up for you so you could see. But I do find it funny that half these people on Twitter, they don't mention any of the trades that they're in, but everybody's a winner when the stock goes up. That's not what we're about. So yeah, big 1 by 2 call spread, 70.75. Yeah, so you look at where they think that this is going. So here's 70, and they think maybe this thing will get to 75. Again, nice looking trade. If you've got some margin in your account and you could put this trade on, I think this makes a lot of sense. Not looking for a huge colossal move, but basically a move up to 75 by May expiration. So again, short-term trade, but they're looking for a bounce here. And again, look at the capital outlay here. What, only $1, $1.20? So I like that trade. Also, there was some short-term calls that were bought as well in ATVI. I put on a limited risk reversal. I added to it in Friday's weakness. Again, I'll talk more about that strategy in next week's webinar, which you again have to be a member for. Moving ahead, what are we at here? Wednesday. FireEye. Again, this is a trade that I'm in. Again, I'll tell you exactly what I'm in. I'm in stock and I'm in options. I'm in long dated options. Now, in the options, I've already taken 2 targets because we just don't know. This name has kind of been wishy-washy back and forth. But again, look at the weekly chart in FireEye, or go back or go out in the daily chart. But the weekly chart really kind of shows you what's going on here. We're above the yearly value area. Look at this base. This thing has been in a base around this $18 level, 18 to I don't know, to the low was, I guess, $10. And it's trying to break out. So I love the long bases, and it's trying to go. Now, I don't know if it's going to go, but I'm willing to give this thing a shot here. So I'm long. I've been long cash since March 7th. And again, that's all on Twitter. You could see my entry in it. But it's just trying to get above and outside of, you can see nice MACD crossover. So I want to ride this. Look at all these VPOCs up here that could possibly be taken out. Again, what is a VPOC? I'll just repeat myself. I know most of you know what this is if you're a regular viewer or a subscriber of Tribeca Trade Group. But it is where a lot of volume has occurred previously where prices never returned. Notice that this was a lot of volume and we've never filled it. It's kind of like a gap. I know a lot of people know in technicals about gaps. It's kind of the same thing. This is where a lot of buyers and a lot of volume has occurred at this price, and we've never returned to it. So if this thing gets going, it could be pretty powerful. Again, I don't know if it's going to do that, but I like the risk to reward. What else? Yandex. Not really going to go over Yandex. I think it's a pretty political charged group, but there was definitely some call buying. In Yandex, this is the Russia internet name. It did bounce perfectly on the 200-day moving average. If I could get there. Oh, looks like it actually broke below it. I did not see that on Friday. So it did break below the 200-day moving average. I would honor that. I'm not in this position at all, but I'm bringing it up because we did see repeat call activity. Okta, by the way. Oh, a couple other software names. I mentioned that, this saw a really, really small call buyer. But again, look at the strength in this thing. $40. And, this, I think you just have to ride the trend. Look at it. It's going to fire off an MACD crossover close to the highs of where it is. Also, another name that we saw small call buying in last week was Coupa Software. Again, another one that they have so much strength in here. So you don't have to get completely, my point of going over all this is you don't have to completely get out of tech. There's a lot of strength in this software enterprise application infrastructure group. So you don't have to just go all into energy just because there's a short-term call buying. I think there's plenty of strength in other places. You could have a diversified portfolio and get plenty of exposure to this, but I think it does make sense to have some exposure to energy, basic materials, as well as tech. So I don't think that you have to be, you know, going back to 2017. I myself was overweight tech. I'm not overweight tech any longer. I think more of a balanced approach makes sense. A couple other energy names that saw call buying. PSX, this refining group, I would also put into the bucket of one of the strongest groups. Valero has just been absolutely on fire. Now, I don't have a position in Valero. I did mention this a couple weeks ago, how it was super strong. You know, nobody's perfect. I was a little bit hesitant going into energy. I do have some exposure to energy. I just didn't take every setup that I thought looked pretty good. WLL is another one, Whiting, that's looks super strong. So again, the trend is up in some of these names. Some look stronger than others. So Oxy was a name. So I have Oxy on very small. That's been running pretty well. I'm also along a couple other names that are doing pretty well. But again, I don't have full disclosure. I'm not overweight the group by any means. All right, so the casinos. Let's just spend 2 minutes on the casinos. Heavy call buying in MGM last week. Some Mays as well as what, August was it in MGM? They bought some of these right before the close. I think that was Wednesday. And keep in mind there's a big decision that's coming up. I believe there's a case about whether or not they're going to legalize sports gambling in New Jersey, which could have effects all over the country. So that could be why we're seeing call buying, not just in MGM, but in names like IGT, Penn National Gaming. This, I think, is a very difficult chart. It's sideways. But I think that it's worth a shot considering all the option activity, and especially on days where there's dips. So it was down 1.5% on Friday, so it gave you an opportunity. And again, I think going back to overall strategy in this market, I think it's very difficult to chase right now because the volatility is higher than normal. So I think you have to get conditioned to buying a little bit, on the big red days and not buying into strength. That has helped me tremendously in the last couple of weeks. Just avoid adding positions when everything looks great. You have to kind of be willing to buy when everything sells off pretty hard. You just have to get yourself conditioned to that. Again, as long as nothing is breaking support. And the other thing is about strategies, you have to be willing to kind of take some off the table into big green days, especially your shorter term options. Again, it feels like even on those big green days when everything looks great, you take some of that money off because it seems like you're getting opportunities to kind of get in. So you just have to wait a day or two and you'll get a big red day to kind of add. So right now that's where we're living. And that's my strategy. Again, this video is completely for information purposes. I'm not giving any advice or anything like that. This is how I'm trading. All right, so just a couple other names. Let me just, since the video is already 40 minutes, let me just finish up here with the option activity. But I think, any one of these names, I did not take IGT last week. I took Penn and I took MGM. And that's enough. But Wynn, I think, also is pretty nice. And I think Las Vegas Sands, you could draw a nice looking candle here. So I'm surprised I don't have this drawn. Not candle, but sorry, trend line. Right in here for Wynn, which I think is pretty constructive. That's a name that's going to continue to be in the headlines. Penn, made some nice progress, but it's back into value and back below the 50-day moving average. Keep an eye on this name. Again, I don't know exactly how that case is going to turn out. Nobody knows, but I think it's going to affect some of these names like IGT, which they're buying. They've been doing a lot with SGMS too, which has a big chunky open interest position. I think out in either July. I think it's July that the position is. But again, this one's not bad, just above the 50-day moving average and the 200-day moving average. So again, look at this. Jeffries put out a nice note on these second tier casino or gaming names. This thing's gone from $56 down to 43. I think much better than buying it at 56. And again, big open interest if you look out in July. All right, so that's all that IGT Penn. Again, that was Wednesday where they went crazy with buying the casino and gaming names. Trip also saw some calls. I think Trip looks okay. I'm not going to detail the chart. A couple names from Friday. One of the trends that we saw last week was heavy buying in the morning and then like crickets in the afternoon. So we'll have to see if that changes. It seems like a bunch of buyers come in the morning and then the afternoon it's pretty quiet. It just shows that there's not a ton of conviction right now. PayPal. I know PayPal a lot because a lot of my customers use PayPal. Again, another one of those names where it just hasn't had a lot of momentum, but you're getting PayPal. It's been a little bit troubled since they reported earnings and they whiffed on earnings, but it does show an MACD crossover, and there was a little bit of call buying on Friday. Trip I just mentioned. I mentioned BHP already. Newmont is another name I was in. I did get out of this last week. Look at the move that this Newmont has had. So you look at this GDX. So I'll just spend a couple of minutes here on the gold miners. I think this gold miners chart looks disgusting. It's very, very sideways. It's been, every time this thing tries to move up like gold, it falls back. So it is just a big sideways chart. Just like gold, I would wait personally for a little bit of a move higher. I don't think you're sacrificing much. Or just look at some of the individual names rather than the whole ETF. This one, I think, because the whole ETF is so sideways, I think Newmont is probably your best bet in this group. Notice you have that VPOC up there right around $45. So you could play for about a $4 move higher in Newmont. So I like this name pretty well. If we happen to get a pullback in gold, maybe on Monday, maybe I'll go back into Newmont. But right now, I'm completely out of the position. I took profits. All right, guys. So that's it for this weekend's video. One other thing that I wanted to mention, I just would feel complete not mentioning it, was there was a big rotation, and I have it written down that I wanted to talk about, but a big rotation out of emerging markets momentum portfolio. So this is the kind of thing that I love to look out for, just to see what big institutional money is doing. Take a look at this big outflow that happened last week. This is about $450 million out of emerging markets momentum, which has a lot of banks and a lot of tech. If you look at the biggest weightings, I think Tencent is the biggest weighting in this ETF. And they went into EMLV, which is emerging markets low volatility. So again, a lot of financials in this, a lot of other things like utilities, but just kind of shows you a little bit of the rotation that we're seeing here. Again, a little bit out of tech and a little bit into some other things, right? So just kind of tells you. Now, for me, again, I'm not getting completely out of tech. I think there's still a lot of strength there in different names, but maybe I just don't want such an overweight name. The other thing to mention is the short-term volatility, short-term bond ETFs are still capturing assets. I was just reading a note by somebody on Twitter that was saying cash balances are low. Maybe straight cash, but look at some of these ETFs. Look at the outstanding shares. Big, and I view these as cash equivalents. Look at the look at the money that's been going into these. Again, this is the outstanding shares, not the price chart. And if I just make sure I change this. So there's been a lot of money that's been going to the sidelines. Even though equity ETF saw inflows last week. I want BLOSO. This is T-bills. Huge money going off out of the market and into basically cash equivalent securities. Then the last one is SHY. And again, that's the price. This is the outstanding shares, which is more interesting. So if anybody tries to tell you that cash balances are high, maybe just straight in mutual funds, but there's a lot of money that's going has gone to the sidelines in the last 3 weeks in terms of short-term bond ETFs. This is 1 to 3 years. The one that I just looked at was BIL, that's T-bills. The other one is another product that's short-term treasuries. So cash balances, I think, are in ETFs have grown significantly, which again I view as a contrarian buy signal. All right, so I will leave you with that. Have a great weekend, everybody, and I'll see you hopefully in the trading room on Monday morning. Thanks.